Pleased to have you back here on the Grap Coin YouTube channel for yet another HBAR update video. So the HBAR chart still shows the same condition and picture. A 5-wave upswing is still possible since last year's June lows. I must admit, the image looks a lot like the EDI chart. Last year's June lows look to be overlapping with this year's jagged 5-wave rise. Sure, so it's no more than a diagonal, right? That's how I usually feel. That are pulled back when a diagonal design is finished. In this case, I've marked it as a wave. It might be a wave 1 in theory according to a leading diagram. That doesn't matter. If it's a wave or a wave 1, it simply shows that it's a diagonal. While it may not seem like much at the moment, the bigger picture does indicate a wave. The region of support is the same for both. The main distinction is that, for instance, a B wave can more easily dip slightly below a wave 2. However, I found it really upsetting to observe. Seeing even modest progress hurt so much. 5 waves have passed. Change, but it lacked the dramatic flare one would expect from a cryptocurrency bull run. That is, ideally something that should start in the next wave up. Thus, the ideal situation would see the third wave, also known as C wave, ascending. A wave of fear of missing out FOMO should surge in price at that time. According to the definition, the support region is the area between 5.2 and 8.7 cents. You could say that's where the support is. In addition, every scenario using waves 2 or B relies on this support region. Just so we're clear, I didn't intend for this chart to feature a 1 to 2 setup. But to reiterate, it is of little consequence. Within the support area, it remains unchanged. We need to focus on this retreat first to see if the support area is stable. Will the bulls emerge before the price drops below 5.2 cents? Ultimately, that is what matters the most. Moreover, I often mention that the 6.8 cent mark marks the conclusion of a prior wave 4, which is also the end of a wave 2 or B wave pullback. But this isn't necessarily the case. You can get it right now. That is to say, that range has already been penetrated by the price. We can declare it finished because there are enough waves to the downside, but it could still point to one more low. There are a number of ways to calculate this. In this setup, but there's a chance we'll hit one more low. I could even call it an ABC or WXC, as it would be a diagonal pattern, and this is where wave 1 was located. Both of those reasons make sense. If it were a diagonal, I'd set resistance at the golden ratio level, but my ideal scenario would be a 5-wave rally that breaks through that level. Personally, I care more about that. I don't think we've hit rock bottom unless this is really a corrective recovery. This means that behold 5 waves extending past the barrier. At present, the price is encountering resistance at 9.8 and 9.6 cents. If it manages to break above the next high, specifically the 11.1 cent level, or for simplicity's sake, the 11 cent level, it would be a strong indication that a bottom has formed. A new high defined as a break above that mark is necessary. Until then, if we move in closer and look at the 1-hour chart, you might be able to make out what looks like a 3-wave rally. So if it's a wave 4, I can just consider it a WXC in a wave 4. Additionally, it resembles a 5 waves down pattern, which is to say, no, I can't. Several of the cryptocurrency videos I posted earlier today reiterated this, and now they're all following suit. At the microscopic level right now, WXC, W, ABC, X wave, and ABC might be the sequence here. Observers might make the observation that, oh, but this seems like 5 waves, but it's obviously not 5. Plus the proportions are off. A wave E's length is often equal to or nearly equal to a wave W's length. On this occasion, it did not occur. Therefore, this Y wave might go a bit higher, which is a possibility I can't rule out. I don't know what it is, but we're involved in it. WXC, I guess we'll find out. I also mean this very second, as I indicated before. It seems like a 5-wave decline is underway, numbered from 1 to 5. So this might be wave 1 all the way to wave 5's base. We may now see a bounce from wave 2, 1, 2, 3, 4, and 5 are the results of 1 down and 2 up. That's also roughly what the Bitcoin chart is showing me at the moment. I left it out of the chart because it's too small to maintain integrity. As long as we stay below yesterday's high, which was established here at 8.8 cents, additional drops appear inevitable. The basic message is, if prices go below the 7.6 cents that was set as a low on Sunday, they could go as low as 5.2 cents or even lower, indicating that 78.6% retracement. Having said that, the bulls are required to should show up before the 5.2 cent level breaks. The basic bullish thesis and rebound that has been in place since June of last year are supported by the chart, which suggests that fresh bear market lows are likely to follow if they don't. That means the bullish argument will need updating after the rally ends. I am updating you on my HBAR. Please let me know if you found the update interesting. Then please subscribe, like, and comment if that's the case. Thank you so much for checking out the Grap Coin channel on YouTube.